Hi all, welcome to Tax Guru YouTube channel. This is CA Rohan R. Pingre, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mask Network. Welcome to our video series GST Relearn. Yes, and today is part 5 and topic is time of supply under GST. So let me allow to share my screen. Time of supply under GST. So what we are going to learn today? Today we are going to learn section 12, section 13 and section 14 of CGST Act 2017. Section 12 talks about time of supply of goods. Section 13 talks about time of supply of services. And Section 14 talks about change in rate of tax in respect of goods or services. So let's start with it. Time of supply is a crucial concept under GST as it determines the point in time when the liability to pay GST arise. This is very important because when we have to charge GST, when GST become liable is to be decided. And this is the concept, this is the law where these are the provisions which tell us when to GST is liable. So time of supply, therefore, crucial concept and that determines the point in time when the liability to pay GST arises. The law provides separate provisions for time of supply of goods and services and for scenarios involving change in the rate of tax. Time of supply refers to the point in time when a supply is deemed to have been made and consequently GST becomes payable. Legal provisions. The governing sections are sections 12, which talks about time of supply of goods. Section 13 talks about time of supply of services. Section 14 talks about change in rate of tax in respect of goods or services. Let's start with section 12, time of supply of goods. Whenever you are watching or listening, try to make notes on your own for your easy reference. So now we are learning time of supply of goods, section 12. Under that first part, forward charge mechanism, that is regular supplies for time of supply for forward charge mechanism. What is the provision? Time of supply is the earlier of. Time of supply is the earlier of date of issue of invoice by the supplier, date of issue of invoice by the supplier, or last date by which the invoice should have been issued, that is on or before removal or delivery, or date of receipt of payment, earlier of entry in books or credit in the bank. Here also two conditions. Okay, so three conditions we need to check. Means whenever we have to apply time of supply is what? Earlier of, whichever is earlier. Okay, time of supply is the earlier of date of issue of invoice by the supplier or last date by which the invoice should have been issued, that is on or before removal or delivery, or a date of receipt of payment, and that is also earlier of entry in books or credit in bank. Means whichever earlier of is the time of supply in case of forward charge mechanism. Okay, let's see example. If date of removal is 10th of July 2025, Invoice issued by supplier 14th July 2025 and payment received 12th July 2025. So what will be the time of supply? It will be earlier of from these three. That is 10th July 2025. That is date of removal would be our time of supply in this given example. Invoice should have been issued on or before removal. Okay, that is the time of supply for goods under forward mechanism, forward charge mechanism. Earlier of date of issue of invoice by the supplier or last date by which the invoice should have been issued or date of receipt of payment, whichever is earlier. Next, second part under that, reverse charge mechanism. Means we are learning time of supply of goods under which we have covered forward charge mechanism, and now we are moving to reverse charge mechanism, RCM. What will be the time of supply? Let's see the provision. Time of supply is again earliest of date of receipt of goods, date of payment, that is entry in books or debit in bank, whichever is earlier, and or 30 days from the date of supplier's invoice. Okay, time of supply in case of RCM is what? Earliest of date of receipt of goods, date of payment, that is entry in books or debit in bank, whichever is earlier, or 30 days from the date of supplier of invoice. Let's see the example. Date of receipt of goods 5th June 2025. Invoice date 1st June 2025. Payment made 18th June 2025 and 30 days from the invoice 1st July 2025 means 30 days from the invoice 1st July 2025. So time of supply would be 5th June 2025, earliest of this. Okay, earliest of invoice date, payment made, or 30 days from the invoice. That is date of receipt of goods, date of payment, 30 days from the date of supplier. So our answer would be 5th June 2025. That is date of receipt of goods. Let's see advance received for goods, time of supply for advance received for goods. This is not applicable from 15th November 2017 onwards. Notification number 66 2017 for registered person except composition taxpayers. Means advance received for goods, time of supply is not applicable from 15th November 2017 onwards. Advance received for services is time of supply is applicable. We will see it. So advance received for goods not applicable from 15th November 2017 onwards. Not applicable. Let's move on to time of supply of services, section 13. Under that, again, first part will be forward charge mechanism. Let's see the provision. If invoice is issued within prescribed time, that is 30 or 45 days, 30 for normal, 45 in case of banking company, time of supply would be earlier of date of invoice or date of payment. If invoice issued within prescribed time, then only time of supply will be earlier of date of invoice or date of payment. If invoice not issued within prescribed time, then time of supply will be earlier of date of provision of service or date of payment. This is a small difference in that. If invoice is issued within prescribed time, that is 30 or 45 days, then time of supply will be earlier of date of invoice or date of payment. But if invoice not issued within the prescribed time, then the date of invoice is not relevant at all. So then time of supply will be earlier of date of provision of service or date of payment. Let's see example. Invoice issued within 30 days. Service provided 10th July. invoice issued 5th August, payment received 20th July. So whichever is earlier is 20th July. So time of supply is 20th July as invoice issued within 30 days. Let's see second example where invoice not issued within 30 days. Services provided on 10th July. Invoice issued 15th August. This invoice date is irrelevant for the consideration because invoice not issued within 30 days. Payment received 12th August. So from this and this, service provided on 10th July, payment received 12th August. So these only two dates are important for us when invoice is not issued within 30 days. So time of supply will be 10th of July 2025. Hope you are understanding very clear after going through the examples. Okay. Now move on to the second part under time of supply for services, reverse charge mechanism. What is the provision? Time of supply is the earlier of date of payment or 60 days from the date of invoice. What is the time of supply for reverse charge mechanism? Earlier of date of payment or 60 days from the date of invoice. Example, invoice date 1st July, payment date 15th August. 60 days from the invoice is 30th August. So time of supply will be 15th August. What is the provision? Time of supply is the earlier of date of payment, that is 15th August, and 60 days from the date of the invoice, that is the 30th August. So 15 between 15th and 30th, which is earlier 15th August. So time of supply will be 15th August 2025. Hope till this you are very clear. Next special scenarios. Now we are moving to special scenarios. Okay, now vouchers, first part, section 12, subsection 4 and section 13, subsection 4. Voucher type. What will be the voucher type? Supply identifiable at issuance. Then time of supply will be date of issue of voucher. Very simple and clear. Supply identifiable at issuance. Then time of supply will be date of issue of voucher. Supply not identifiable. This is we are talking about vouchers. Special scenarios, vouchers. Supply not identifiable, then time of supply will be date of redemption voucher. When identifiable, supply identifiable at issuance, then date of issue of the voucher will be our time of supply. Means what we are talking is that whatever rate is applicable on that particular date, will we decide our GST liability. Means that rate would be applicable. Means time of supply would help us to decide which rate should we apply. Okay. Example, voucher issued on 1st July 2025 for rupees 1000 usable for a specific item. Redeem on 20th July 2025. Time of supply 1st July. Why? Because it is identifiable at issuance. Supply identifiable at issuance. Therefore, date of issue of voucher will be our time of supply. Why? Because here it is mentioned voucher issued on 1st July for 1000 usable for rupees 1000 usable for a specific item. Sorry. So here redemption date not applicable. Whenever supply is not identifiable, then date of redemption of voucher will be our time of supply. Let's move on next. Residuary clause. If none of the above rules apply, time of supply is the date on which the recipient shows the receipt in his books. Sorry for the interruption. What we have in special scenarios, we have covered voucher, section 12, subsection 4 and section 13, subsection 4. Talks about voucher types. 2. Supply identifiable at issuance, then time of supply would be date of issue of voucher, and supply not identifiable, then time of supply would be date of redemption of vouchers. We have seen the example. And the second is a residuary clause. If none of the above rules apply, time of supply is the date on which a recipient shows the receipt in his books. If none of the above rules apply, time of supply is the date on which the recipient shows the receipt in his book. So we have covered section 12 and section 13, that is time of supply of goods and time of supply of services, both forward charge mechanism and reverse charge mechanism. Now we are moving to section 14, change in rate of tax. Okay, change in rate of tax. Then what will be the scenario? When there is a change in the tax rate, the time of supply is determined by analyzing date of supply, date of invoice, and date of payment. Supply, invoice, and payment dates are analyzed. Okay. In case of change in rate of tax, time of supply determined by analyzing what? Date of supply, date of invoice, and date of payment. Okay. Now we will see that matrix also. Okay. A matrix is provided under section 14 to decide whether old or new tax rate is applicable based on the timing of these events. What section 14 is talking about? The matrix will provide us whether old or new tax rate is applicable based on the timing of these events. Let's see. Where supply, invoice, and payment are where supply, invoice, and payment span across rate change dates. Time of supply is determined using the matrix, that is situation A. Goods or services supplied before the rate change. This is the main part of the topic under section 14 in change in rate of tax. You have to focus on this before rate and after the rate change. What? Goods are supplied, services supplied before the rate change, and situation B, goods or services supplied after the rate change. We have to focus on this before the rate change and after the change rate. Why I'm telling? Let's see. First, invoice date before change, payment date after change, time of supply, date of invoice, applicable tax rate, old rate. Okay. Why? Because see, goods or services, if goods or services supplied before the rate change, goods or services whenever supplied before the rate change, invoice date before change, payment date after change, time of supply, date of invoice, and applicable tax rate will be old rate. Invoice date after change, payment date before change, time of supply, date of payment, old rate. You have to see whatever are the before, because what goods or services are supplied before the rate. Whenever goods or services supplied before the rate change, then you have to see before. Before, what will be the before? Means if invoice date is before, then time of supply will be date of invoice between the invoice date and payment date. If payment date is before the change and invoice date is after the change, then the time of supply is date of payment and old rate. But both are after change, and goods or services are supplied before the rate change, and in that case only new rate is applicable, because earlier of the two is the time of supply. When invoice is also after change, after the change is issued, payment date is also after the change, whichever is earlier, But what happened is that it is after change, so new rate will be applicable even though goods or services supplied before the rate. In first two cases, we are focusing why on before the this, because our time of supplies depends on this before. Let's just see before change invoice date is before change, payment date is before change, so we have to just ignore this after and just select this, and old date will be applicable because what payment date is before change, invoice date is before change. Only when goods or services supplied before the change rate change, but both are invoice and payment both after change, then earlier of the two, and that time it is new rate is applicable. Let's see second scenario. It will be clear after reading this or learning this second situation. Goods or services supplied after the rate change. We have to now focus on after the rate change. Invoice date before change, payment dates after change, time of supply, date of payment. After, focus on after. So applicable rate tax new rate because it is where time of supply is after. Invoice date after change, payment date before change, time of supply after, because here it is after, goods or services supplied after. And if time of supply is date of invoice after change, therefore applicable tax rate new rate. And if both invoice and payment date are before, whichever is earlier will be the time of supply, but applicable tax rate will be old because it is before the change. So old rate will be applicable. Very simple. If you study like this, maybe you look it as a mechanical, but it is the simple to understand. Focus on what is also important. You have to focus when goods or services supplied before the change, then you have to focus on before word, before. So between invoice date and payment date, time of supply, if invoice issued before, then time of supply is of course invoice, old date applicable. If date is before change and invoice issued after, then again time of supply will be date of payment and old date applicable because it is before the change. And in case in that scenario, invoice and payment all done after the change, whichever is earlier will be the time of supply, but it is after, so the new rate tax applicable in that scenario. But when goods or services supplied after the rate change, then we have to focus on afterwards. And then invoice is issued before, payment date is after, then your time of supply is after payment date, and the tax rate would be applicable new rate. And in case invoice is issued after, payment is received before, but we are focusing on after, so time of supply is after change, that is invoice date, and rate of tax is applicable new rate. And if invoice and payment be issued before, whichever is earlier would be the time of supply, and rate of tax will be applicable is old rate. As simple as that. Focus on what the word before and after. Hope you are getting the clarity. Let's see examples for the rate change. Example 1. Supply before rate change. Before, focus on before. So supply date is 30th July, old date is 18%, invoice date is 2nd August, payment date is 5th August, new rate 20%. So our what will be the time of supply? Invoice date, that is 2nd August 2025. 1 minute. So supply before rate change, we are here. We have to compare what? Invoice date and payment date. 2nd August, 5th August, whichever is no, we here not whichever is earlier because supply is before rate change. So of course, 1 minute. supply before rate change. I think here is what how they say new rate supplies. I'm little bit maybe a type mistake is there because we are talking about supply before rate change. We have given invoice date and payment date. Okay. Time of supply would be supply is on 30th July. That is before rate change. Rate change on 5th August. So, okay, invoice date is 2nd. So here old rate is applicable. Maybe by mistake is a new rate applies. It is old rate will be applicable. That is 18% will be applicable. Okay, let's see supply after rate change. Let's see. Supply date 2nd August. That is invoice date is 30th July. Payment date is 31st July. Time of supply would be whichever is earlier, that is invoice date 30th July. So supply is after change, right? Since supply is after change, so time of supply will be new rate applicable, that is 20%. Okay. You have to just focus on this matrix very clearly. Goods or services supplied before, then be keep in mind that before you have to see, and when goods or services supplied after the rate change, then you have to focus on what after the time of supply will be that, and the rate will be applicable in that. So okay, let's see key practical points. What are the key practical points? Tax invoice for goods should be issued before or at the time of removal or delivery. For services, the invoice must be issued within 30 days or 45 days for banking companies. And payment date is taken as the earlier of the entry in books or credit in bank. Okay, now we are moving to conclusions that can be drawn from today's learning. Okay, we have covered section 12, section 13, and section 14. Section 12 talks about time of supply of goods. Section 13 talks about time of supply of services. Section 14 talks about change in rate of tax. Okay, let's see what conclusions we can draw. Time of supply determines when GST liability arises, not when tax is actually paid. That is very important. Why we are learning time of supply? Yeah, as it determines when GST liability arises. GST law differentiates time of supply of goods and services. Separate rules apply for forward charge, reverse charge, vouchers, change in rate of tax, and residuary scenarios. And business must track invoice issuance, supply execution, and payment date precisely for compliance. Whenever you have this data, only then you can correctly determine your time of supply, and then you can correctly charge the rate of tax. Okay, so therefore businesses must track invoice issuance, supply execution, and payment dates precisely for compliance. This is for today. Today was part 5 under GST Relearn, time of supply we have studied, and now we will meet next week in next video. That will be our part 6 under GST Relearn. Hope you are all learning, you are getting benefited from this. If you like this video, please click on like, share with mass whenever means those require this knowledge, basic from basic to advanced in very easy language, very easy understandable language. Do share with your network so they all will get benefited from it. So connected with Tax Guru YouTube channel. If you are not yet subscribed the channel, then do subscribe for latest updates. I'm also doing two other video series on the same channel. That is what law says, case laws based discussion. One is on income tax and one is on GST. So those are professionals, particularly who are dealing in litigation practice. For them, it is utmost important. So be in touch. You note down my contact numbers, contact email ID, that is rohanrp1983@gmail.com. If you have any queries, then do let me know, or you can comment on below the video if you have. So see you soon.